everyone. Welcome to the Stock Market Morning Prep video for Thursday, August 28th. Crazy volatility in the markets this week. Yesterday we were up yet again. A nice bounce off of the lows, two-day bounce, and at the end of the day we lost just about all of the gains to rally into the close, back up to its highs. Dow Jones lost about two and a half to almost 300 points, and then gave it all back, and then all of a sudden rallied back again to recapture that loss to close positive again. Crazy volatility, guys. That's all I can say. But where do we go from here? Well, I'm sitting on the market neutral right now. The longer term charts, weekly and monthly, have some serious damage. I'm going to show that to you on these spiders. A couple of indicators here. The McClellan oscillator, you can see here, very reliable. I did mention down here we're looking at these washout levels. Look for a bounce. We did get the two-day bounce, and now we're back neutral again. Okay, if you recall, we've been in the range all year. Okay, and this is just showing you for March, but it's all the same. And now we're back neutral again. So anytime you get these washout levels here, look for those bounces. It creates great opportunity, as well as even up on to the upside. So now we need to see where we go and where is price right now on the charts. I'm going to show that to you as well. Take a look at the bullish percent SPX, also a very reliable chart. You can see we were down at the washout levels, but look what's happening here. This only bounced about 30%, not even close to getting back up to these areas here. So very weak. The bullish percent SPX is telling us that the S&P is still very weak. Okay, so that's also not a good sign. But I want to show you the monthly and weekly charts. Here's the S&P Spiders monthly chart. Now, we need to stay above this 20-month moving average here. This is critical. You could see how in 2009 we lost it. We got back above it, and then we lost it again in July of 2011, and then we got back above it, and then from there was the that was the October 2012 lows from this most recent rally, this new leg up here, and now we're beginning to pretty close break this down. Now today is Thursday and Friday, and then we also have Monday's trading, so we need to really see where this closes. Remember also, keep an eye on repetitive patterns. You can see every time we violated it, we've got back up to the previous month. Same thing here, as you can see, and obviously this was the crash. So let's see if this if history repeats itself and breaks back down and then runs back up again. But this is not a good sign here, guys, in the longer term picture. Okay, weekly, even worse. As you can see, the 20-week moving average up top, 50-week broke, and the 200-week moving average is down here. So we're just back testing this here, and we could easily fail again. And if that does happen, this is where you can get aggressively short here, the market. If the markets can get back above here, maybe next week we run in and we fail here in this area of 200, 202, which would be 2020 in the ES. Then I would say this market rolls over again, retest the lows, and actually test the 200-week moving average. Very nasty looking chart in the long term. Now on the daily chart, you can see where the carnage has been. Really nasty sell-off here. 5 days, over 11%, and then we had a big rally. Let me just open the chart so you can see it. This is that band of resistance where I put out beginning of the week, and we're into that band now. That's the 50 percentile retracement on the Fibonacci, and now we have a 61.8 right here, which is that kind of that golden zone here where we love to see where price hits and actually fail. So if we can get back into this area here, maybe push up today, tomorrow, and then fail, and that does fail, then I would be looking for continued move lower in the indexes. Take a look at the diamonds, pretty much the same, 50% retracement back up here, just about. Big move up, but again, we need to see some deeper moves to the upside with volume, and you can see here we did get a good volume spike here, above average volume. So let's just see where this market's headed, but this is still not a very good chart. The damage has been done on these charts, guys, and you got to be very careful. Transportation sector not even rallied 38%, so that's not a good sign. Our main leader is extremely weak here, coming into some seasonal strength, but you got to keep an eye on the transports, guys, and also the Russell. Now the Russell didn't even rally 38%. That's what I really wanted to show you. You could see Fibonacci retracements at 38% right here to the top of that band of resistance. If this fails and starts to roll back down again, that's going to be a serious issue for the bulls here in the S&P. So we really need to keep an eye on what's going to happen today, tomorrow, and Monday. And Q's a big feather in the bull camp, big, massive rally, almost rallied all of its losses. So that is a very good sign. But again, we have extremely mixed signals here in the markets. Our indicators are now back to neutral. I'm taking a neutral stance today. I like to sidestep when every time you have a market that gaps up or down with extreme. You might want to kind of take a step back. But yesterday we just had that slow grind. We gapped up and grinded higher with not a real decent pullback to get long the markets. So I'm looking to hopefully we're down today. I'm looking to see if we rally, we gap lower, and then we rally yet again. That'll be a good spot to look to buy the dips. Okay. Have a great day, everybody. We'll speak to you later. Take care.